I am Gerardo Del Real, a mining investor and editor of Resource Stock Digest, here with my colleague, friend, and business partner, gentleman who's also an investor, among other things, and the editor of Daily Profit Cycle, Mr. Nick Hodge. This is the 294th episode, the New Orleans Investment Conference edition of Investing in Bizarro World. We're going to talk the markets. We're going to talk the changing landscape. We're going to talk gold. We're going to talk deficit levels. And we're going to talk about what comes next after what has been a whirlwind of a couple of months. First and foremost, I hope everyone is well. We're competing with Mr. Schiff. We're competing with the bar. We're competing with New Orleans in the evening. So thank you for those of you that made it out. Mr. Hodge, how are you? Interesting times.
Some stiff shift competition as the way Gerardo. He draws a crowd. I'm doing good. Happy to be here. It's 14 years in a row I've been telling people. So, oh no, excuse me, my math is wrong. 12 years in a row I was telling people. So 30% of my life I've been giving kudos to Brian London. Obviously, it's the 50th anniversary, as you said, and so I'm happy to be here. How are you?
That's how Nick brags about how young he is, by the way, by telling everybody a third of his life he's been coming to this conference, and it also speaks to his intellect and his veracity for investing. No, jokes aside, I'm well. As I always say, the wife keeps getting prettier. She loves me more every day. The kids are healthy. I have my magic crystal, so things are good. No complaints. I mentioned right off the top that we're living in interesting times and that we just had, one of the most consequential political elections of recent memory. And however anyone feels about that, right? I think it's important to put it in the context of what we do, which is investing and allocating capital. And so the next 4 years are going to look drastically different. And, the markets are front running that. We have a Dow that's at record highs. We have gold at 2,700. We have Bitcoin flirting with 100,000. We have deficit levels like we've never seen before, all within the context of a dollar index that's at 107.56 and looking to go towards the 108 level likely over the next few days. All of those narratives cannot coexist for a sustainable period of time. So I want to start with the overall indices. Are you seeing any correlations that stand out to you in a pronounced way? Or the other question, and maybe it's a better one, any bifurcations in the correlations that perk your antennas up a bit?
You assume I know about correlations, Gerardo. No.
Seem like the kind of guy that correlates well.
The correlations have been all over the place. So, the typical correlations of the dollar and the 10-year yield to gold are inverse, right? Dollar strong, gold weak, and rate strong, gold weak. What we've seen this year is correlations all over the place. We've seen correlations correlating and we've seen correlations not correlating. So I didn't put a table in here, but if you look at like the past 90 days or even the past 120 days, you would see that gold was trading more in step with rates in the dollar. We had the rates that went up after the Fed cut, in September. And they continued to march in lockstep through the early fall, right? Gold was hitting records, got up to $2,800. And then we had the election. And then we saw those correlations start to go back towards their traditional territory. We saw the dollars continue to strengthen, as the chart shows here, up to 106, 107.
Sure.
And you saw gold start to weaken just a little bit, right? It went down below 2,600. It bounced off 25. I'm going to say it was 30. There it is right there. And so the correlations have been all over the place, as I said, and that's sort of what you're saying, is that this is an unsustainable place, right? To have these things going up together. One more thing, just on the sectors. So, for the entire year, you had the Magnificent Seven leading, right? When you look at the S&P, which has hit something like 60 record highs already this year, it was being driven by those tech stocks, right? We would look at the on a day-to-day basis, and you'll say, oh, NVIDIA was responsible for 20% of the move in the S&P today.
Right.
Absolutely crazy, right? So that's backed off a bit, right? We're seeing a bit more of a normal market. So, the communication sector is not leading. The IT sector is not leading. I'm talking about the 11 sectors of the S&P now. And you've seen more sort of Trump sectors in the past couple of weeks. You still have the S&P near record highs, but it's financials leading more, industrial starting to lead more, and energy, despite oil being at $70, the XLE and the XOP, which is the drillers, have started to pull away. So, and you asked me what I see that's interesting. That's what I see.
Well, let's get specific now. Let's start with gold, right? This is an investment conference that obviously was one of the preeminent conferences that really led the way, right? Mr. Blanchard really led the way for gold as a hedge, a protector of wealth, and we've seen that play out for several decades. That's accelerating now, and it's accelerating, amidst the backdrop of that dollar index really strengthening. Both those things cannot continue if we're going to sustain the amount of spending that we've incurred over the past 3 to 4 decades. And yes, look, the president elect and his administration have vowed to go in there and be efficient, more efficient with government waste. And I hope that comes to pass. I'm rooting for that, right? That's a good thing. But there are a large amount of programs that will have to be slashed in order for that to happen. And so if we're going to get a corporate tax cut, if we're going to get a tax cut on capital gains, and we're also going to get a Fed that's going to continue to cut rates because the debt is so unsustainable that it has to try to inflate its way out of the debt, what gets broken within that narrative? Because again, all of those things can't continue simultaneously. They can't hold hands for the next 4 years without something breaking. And the bond market, I think, is highlighting that.
Well, I would point to the bond market. You likely know more about that than I do, right? So I'd probably kick it back to you. But it seems like the bond market would be what breaks and what is breaking, right? Did I have a 10-year chart up here or not? No, I don't. But like the 10-year yield started going the opposite way, the Fed, right?
Higher as the Fed cuts.
So it's telling you that the Fed is wrong. And so you're going to get to a place where the Fed's either going to get backed into a corner or the bond vigilantes are going to do what they do, right?
Gold. What happens to gold?
Oh, I mean, you could do crystal ball questions. Sir, I think gold's so. I think gold's relatively flat for the next 3 to 6 months, right? It had just a really big up move, and you got to digest that. You know what I'm going to say next? Trees don't grow to the sky.
Correct.
It's
All gaps fill.
all gaps fill. It's got to go sideways for a little bit. So look, you can't just keep going up and to the right. And you see it wants to consolidate here. We'll likely do so between $25 and $2,600. And then you also have to digest this election, right? Which was just the most contentious one some people say that we've ever had in the United States, right? You got to let people move past that, markets move past that, and you're still getting this sort of fervor, right? The meme stuff that you were just talking about with the Department of Government Efficiency, et cetera. We'll see if some of that comes to pass. I'm old enough to remember 2016, the last time Trump took office, and the dollar was strong heading into that. Did I put the Trump dollar chart in here? I'm not sure if I did. Sorry, guys. I'm old.
Or just to recap what happened when Mr. Trump took office last
There it is. He took office and the dollar index was right where it's at now, right? 104-ish, right? And then Trump came into office, and despite all the whatever he talks, right? The reality is a different beast when you get in there and talk about draining the swamp and you can't get the plug out of the bottom of the fucking sink.
Right. Yeah. No, absolutely. So you think sideways trading in the gold space for the next 3 to 6 months, is that a trading pattern if it materializes that should be bought? And does that extend to the equities? Is that an opportunity?
Yes, it's an opportunity to buy gold because I think it's a higher longer term, right? I mean, Graham Williams was on stage the other night talking that gold is just an opinion. I think it's going higher. I think it goes higher with the population. I think it goes higher with the money supply. I think it goes higher as inflation comes back on. But I can't say, on February 27th, the gold price is going to be this, right? I mean, no one could do that, right? So I do think it's an opportunity. I think gold gets higher in the future. What I've been thinking and heaven forbid feeling is that,
You have feeling.
everyone knows the gold stocks haven't had their move yet, right? Right. Some of the quality ones, right? Some of the good developers, Artemis, G-Min, et cetera, like they've done okay. But on the whole, right? You look at the GDX, you look at the GDXJ, everyone knows they haven't shown the leverage that, they showed in past cycles. Certainly not in the 2008 to 2012 timeframe, certainly not in that bump we had in sort of 2016-ish, right? And so what I'm saying is like, I own a large percentage of gold in my portfolio. I'm not talking about the safe. I'm talking about GLD. It's something like 17%. You know this because I publish it on a monthly basis.
Correct.
I can take that down to 15, 14, 13%. It's a fair amount of capital, and I can start deploying into gold equities. I'm not sure if that's what everyone's going to do. I think that makes sense, right? Like I've ridden the GLD. I put a good percentage, return in my account. And if I think that it's going to be sideways, and I think that, at some point this money from, these majors are generating at $2,500, $2,600 gold and falling down. Yeah, we saw the ISC spike, but at some point that's going to come to the bottom line. And people are going to start going to these gold equities. And I think that reallocating some of this gold money makes sense for me. And I like to think what makes sense for me is, goose and gander and all that.
So I'm going to talk our book a bit now. So part of what we do is we co-own a publishing company that specializes in financial research, right? And amongst those services that we offer, and there's multiple, there's a crypto service, which I think is one of the best in the business. I focus specifically on natural resource stocks. Mr. Nick Hodge here does a little bit of everything. But one of the services that we manage together is a service for accredited investors. And if you're at this conference and you're allocating anything more than $10,000 in the market at any one time, a great way to leverage a rising gold price and to leverage, the power of time in a gold environment where we all see gold higher is to do it through private placement. So for those of you not familiar, we have been able to develop, a network thanks to advisors and people around us that, have been generous with their time with us over the last 15, 16 years that allows us really excellent deal flow. And I'll give you a perfect example. A gentleman sitting in the back here is the CEO of one of my favorite silver gold companies in the space. It's a company named Kingsman Resources. We helped finance that company here recently at 25 cents. By recently, I mean that financing just closed last week. Shares are trading at the 40-cent level. So that deal, that specific deal, the terms were you could buy one share for 25 cents, and then you have an option to buy another share, the option but not the obligation, for another couple of years at 40 cents. Now, let's say the gods smile on us and Mother Nature left some silver and some gold behind, and that's what we all expect, or we wouldn't have written the check, right? And shares go to $1 or $2 or maybe $3. Well, I have my original shares, but I also have the option to go back and buy another share for every share that I paid for at 40 cents, regardless of what that does. Now, if Mother Nature left nothing behind and Mr. Emerson does not execute well, then what happens is I don't exercise that warrant, but I don't have to. So in the event that the company does well, I not only have the share, but I have the option to buy another full share at a predetermined price, at a set price for 2 years. And 2 years in a bull market, for those of you that haven't seen a bull market, is a lifetime. A lot of money can be made, and it's a great way to mitigate risk in what's inherently a risky space, right? The junior space, the commodity space is very cyclical. And so if you happen to catch a bull cycle, you want to leverage as much of that as you possibly can. And private placements are a phenomenal way to mitigate your risk and really set yourself up for a lot of upside if you're able to pick the right companies. And so, anybody can cherry pick their picks and just pick the best ones and put a bunch of pretty numbers up there with a green bar next to it. These are our last 6 financings that we've done over the past 6 months. And these are checks, companies that often we write checks for. Our subscribers are allowed to participate in those deals. They get an allocation. The company benefits in the sense that they have strong shareholders. We benefit in the sense that we get to participate in deals that we believe in. We put our money where our mouth is. And the company knows that, the shares are at a certain place because share structure is something that I was taught very early in this business. Who owns the shares? At what price do they own them? That is so critical when you're in a bull market because you have 2 types of speculators in this space. Speculators that buy it and sell it in 4 months and just hold on to the warrant because why not? It's a free lottery ticket. And speculators that understand the story, that have somebody explaining it to them, and that are really kind of guiding you along the way to get the most out of that bull cycle. We're in a bull cycle, folks. And so I encourage anybody that wants to speculate in private placements, and if you're an accredited investor, which most of you likely are, or you wouldn't be here, to take a look at that service, and we can provide a link, and we'll even give you a free trial offer if you want to just take a peek for a month or 2. Sorry, Nick, I like giving stuff away. What can I tell you? But take a peek and look, these are the last 6 deals that we've done. Hannon Metals is my largest personal holding, and that's a deal that we did roughly 4.5 months ago. It's up 40% in 4.5 months. Alcon Silver's a deal that I think is still open, if I'm not mistaken, right?
They're pinching it off here real close. So there's a tiny bit left on the president's list, but they're going to be trading here in the next, I think, 3 weeks. So this is a deal I've been in for a long time. It's a Peruvian silver deal. They had an asset called La Princesa. It has 30 to 40 million ounces of silver, pure silver play. And then they negotiated a deal with Pan American to get their silver assets in Peru, as Pan American focused elsewhere. So it's a pure silver story, a high grade silver story, and it's coming to market at what seems like a pretty good time.
Excellent. Q2 metals. Everybody knows it's been a tough year for lithium prices, right? Lithium, the actual commodity, has come down some 75-80% from its peak here about a year and a half or 2 ago. And despite that, we financed that deal in August, and we're up 276% on that deal. And we have a half warrant for each one of those shares. And that's in a tough lithium market. So with lithium bottoming And with the rebound that I foresee here in 2025, and with the company cashed up and putting out some phenomenal results, I suspect that continues to run. URZ Energy, that deal closed, I want to say a week and a half ago. We're up 55% on it. And it came with a full warrant, and our warrant is almost in the money, and yet the deal just closed.
It's worth talking about, maybe a little background.
Yeah, well, the background, I'll let you provide it because I think, you were earlier to that story than I was.
Well, so the URZ3, the 3 signifies that it's the 3rd iteration of the deal, right? The first one was Euroners Energy from Dennis Higgs, in the what I call the first uranium cycle. It's not really the first, but first in my lifetime. In the
Your young life.
2003 to 2007, they ended up selling to Energy Fuels, and Mr. Higgs is still on the board. And then they started URZ Energy a few years ago now. I don't remember the exact year, 2015, 16, anticipating the bull market that we're now seeing unfold. Took an asset, developed it a little bit, got sold to Azarga Uranium, and then Azarga ended up getting taken out by um, uh, Encore Energy
Okay.
in a share deal, right? And then Encore unfolded to $6, $7 as the bull market started to play out there. So just really worth highlighting the people, which you started to do, the structure, obviously, but then the payoff that can come. Like, I haven't added up everything because we financed multiple times and we had warrants that we exercised, but that was definitely a 10-bagger deal when all was said and done. Yeah.
Easy. And again, people that we know, people we've known for over a decade, people we've made money with. So they have an asset, they have a great land package, but we're confident that they're on the hunt for more. They're in great jurisdictions here in the US. And, I think that's a trend that continues in 2025. I think assets in North America or assets in stable jurisdictions are going to start commanding not just a premium, but significant premiums. I think if you have a discovery of significance and you have that discovery in a jurisdiction that's favorable and stable, I think there's going to be a pretty penny to pay for those deposits and those discoveries. And so I fully expect that with URZ3, we're going to do just as well, if not better, than we did in the first 2 iterations of URZ. Greenlight Metals, it's a company that's exploring for copper and some gold, definitely some gold in Wisconsin. And so that state is a state that was very anti-mining for a very long time, and
They
they
moratorium.
had a moratorium that's since been lifted. They are now very receptive to mining. They've lifted that moratorium, as I mentioned, and they have a great team. They have a great land package, multiple assets, advanced targets. So that's a company that's private, that should be closing its deal soon. I expect we will do well with that as well. And then last but not least, Kingsman Resources. We are up 60% on a deal that just closed last week, if I'm not mistaken. We have a full warrant, as I mentioned, at 40 cents. It's a past producing silver district and a land package that nobody was able to figure out how to consolidate. So this district produced in the 40s and lightly in the 50s. For 70 something years, it sat there dormant because nobody could figure out how to put all the pieces to that puzzle together. Mr. Emerson and his talented team came in, figured out the key, did so very, very quietly, consolidated all of it, gathered a ton of the historical data. And so we don't wonder if there's silver there. We don't wonder if there's gold there. We don't wonder if there's lead and zinc there. We know it's there. We wonder how much is there, and we wonder how much more can be discovered. And the reason we wonder that is because we can see it's underground mining. We can see where a lot of the silver is and where the mineralization runs, but it's never been drilled below the water table. And the really exciting part for us is not just the potential above the water table at a long strike and depth, but below the water table, it might be there because traditionally those grades tend to get richer in the better systems. And again, a company with an $8 million market cap, that's predominantly silver with some gold in northern Mexico with drill permits in hand. The financing allows them to drill an 8,000-meter program commencing in mid-January. I think by March, Kingsman could be one of those companies that has us up 300-400%. No pressure on Mr. Emerson and his team to execute and deliver that, but I did write a significant check as well as Mr. Hodge and several others. And look, the CEO owns 37% of the shares. His interests are fully aligned with mine in making this thing work. And so it's structured as well as any deal that I know in the space. The only warrants that exist are from the last financing. Prior to that, 0 warrants, 0 options, 0 debt. It's going to be a fun 2025 for Kingsman Resources and for those of us that are shareholders. And that's a company that, I've told subscribers of mine, if you weren't able to get an allocation in that deal, you should be buying it in the open market if you want some great silver exposure at a very, very early stage, but on a very advanced asset. That's a rare, rare proposition in the junior space. So I highlight that to say one of the less risky ways to allocate capital in this sector during a bull market is through private placements. If you are an accredited investor, it really gives you a lot of torque, a lot of leverage, and you can do really, really, really well with that. Anything to add to that, Nick?
No, and then I'll talk for another 2 minutes. Private placements are a dime a dozen. You scroll the interwebs, or there's some services out there that list them, and lots of money. Lots of companies are always trying to raise money for different reasons, right? The infamous G&A, of course, to keep the lights on, whatever it is, right, to keep their salary going, so they can stay in the office, etc. But they're not really looking for anything.
Trips to Costa Rica.
The famous line is they're mining shareholders, right? And not looking to mine anything in the ground. And so you can, try to find private placements on your own, but you have to sort of have that network that Gerardo was alluding to earlier to honestly just take some of the bullshit out of it for you, right? Because otherwise you're ready to you end up writing checks into lifestyle companies. And so that's one of the things we provide, is that layer of vetting. And then the second thing that's true with us is that oftentimes we're writing checks into the deals alongside the subscribers, right? And I think that's different than a lot of other outlets and newsletters out there, where and in some cases the editor isn't even picking the stocks, and sometimes not even writing the newsletter, from my experience. So I just think it's a layer of separation there. And last thing I would say on private placements is I'm trying to empower people, right? Because before I knew about private placements, I didn't know about private placements, right? And then someone said, you should do a private placement. And I was like, well, what's this? And now I'm going to get a little bit to a gray area, right? Because that was 10 years ago, and I may or may not have met the definition of accredited investor.
You know how to check the box.
There's a box that you check on the forum, right? And so, and there's different things, and this is what I would implore people to check out. There's different categories that can make you an accredited investor, right? I'm not going to run through them all here now, but in some cases, there's a way to get in if you're friends and family. And so there's ways to make things happen in this world. And if you're interested in doing so, then you should do some of the legwork for yourself to get involved in private placements.
Yeah, and lastly, I would say, and I think this also sets us apart, the deal flow is excellent. Luckily, the network we've developed is top notch, but we don't take a cut or a commission or a fee for recommending these deals to our subscribers. Our only goal is to make money for ourselves and to make money for our subscribers. So the company doesn't pay us options because we raised them $1 million, or they don't say, well, hey, Gerardo, if you do this, I'll do that. That's not the way that we operate. Our only interest on that side of the business is for us to make money. And if we make money, you're going to make money as well. And you're going to want to continue to make money together, because making money is a lot of fun. And if we don't, you're not going to want to hang out with me very much, because losing money is not fun. So it's a pretty simple, straightforward proposition, but being transparent about the compensation and where it comes from, that's really important to us, because integrity in this business is sometimes a little bit tough to come by, and it's good when you're able to come by it, right?
Absolutely.
All right, what else you got on your mind, Mr. Hodge?
I'm getting close to wrapping up, unless you want to give away picks or you want to talk about anything else.
I have to highlight my two favorite picks right now are Hannon Metals, which is a company that's got a 1,000 square kilometer land package in a part of Peru. And I love this story, right? It's a part of Peru that was coca fields for many, many decades. And so it's part of the Andes that was never explored, has never been explored by modern methods, because of the fact that kind of hard to go in there and take a sample when they're growing coca in the Andes, right? So the government came in 10 years ago or so with the help of the US and really cleaned it up completely, and just completely got that drug trade out of that part of Peru. And it has in return, they've done a great job of keeping it clean. And so, we know a group of geologists that were intelligent enough to stake an entire basin of unexplored Peruvian tenure. They are now a top 10 landholder in Peru. And the company's got a market cap roughly of $55-60 million. Every other company that's on that top 10 list has market caps in excess of $1 billion or more, some in excess of $10 billion. Now, granted, those companies are further along. They've made discoveries. They have resources. A lot of them are in production. But what Hannon has thus far discovered is 18 copper gold porphyries and several gold standalone targets that are just humongous in scale. The one cloud that's been hanging over the company the last several years was its ability to get a permit, because Peru has been difficult in past cycles to work with in regards to the permitting process. That's really made a U-turn here in the past 12 months. We believe we'll have a permit here in the next couple of weeks that allow us to go ahead and initiate the activities for exploration. And we think we'll be drilling in the first quarter of 2025. If that is the case, that $60 million market cap isn't going to be $60 million for very long because of the amount of targets that are there and the scale of the targets. We visited several of the projects in September, and I mean, there's one that's just on a global scale, one of the most significant pre-drilling mineralized systems that anybody has ever seen. It's a 5 kilometer by 5 kilometer system that's gold rich on top and copper rich on the bottom, and there's literally tens of meters of just this blue rock. It's copper just oozing out of the wall. So we know where to drill. We know where the gold is. The gold is all over the place. It's high grade. The copper is all over the place. It's just a matter of getting the drill bit going. I think that gets going here soon. It's my largest personal holding. So Hannon Metals is one that I would encourage you all to do some due diligence on if you want copper gold exposure in Peru. If you want to be safe, wait a week or 2, 3 maybe, and wait for that permit announcement. And, once we have that, I think we're off to the races.
Excellent.
What you got, Mr. Hodge?
Let me talk about a company, and then we'll shut it down here. Last night on the mining share panel, I was asked to give a couple of tickers. I talked about Bravo. Mining, so I'll talk about that again. That's a company that's onto a world-class PGM nickel gold deposit, right? And just found some massive and semi-massive sulfides over a kilometer away from the main deposits. So there was a gap in that chart we discussed on this podcast.
Had it filled.
That absolutely got filled. And they put out some drill results in the past week here with some more sniffs of that massive sulfide mineralization, but more importantly, a big magnetic target that they're flying some line surveys over top of. And I have to think that the chairman and CEO, Luis Acevedo, likes what he sees because he's been buying in the market in the past week, and he already owns a lot of stocks. So Bravo Mining is the one I've been talking up here.
I like it. And last but not least, I have to mention Kingsman. I already explained to you, for those of you listening or watching, and those of you that were here, why I love Kingsman Resources. It's my favorite silver play. I think it's very little risk for a lot of reward. So those would be the names that I would be buying today. Anything else, Mr. Hodge?
I think that's it.
It's been fun. It's been real as always, everyone. We have a bar to get to. I am Gerardo Del Real. This is Mr. Nick Hodge. This was the 294th episode of our weekly therapy session that we call Investing in Bizarro World, the 50th anniversary New Orleans Investment Conference edition. Take care, folks.
Adios.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.